Kenya, which is the largest economy in the East Africa Community region, registered the highest levels of gender inequality among the 5 EAC member states. According to the 2015 edition of the Gender Inequality Index issued by UNDP, ranked the country 135 globally. This is blamed on lopsided policies coupled by a lack of a level playing field in the economic sector that is inhibiting women from engaging in trade and investment. This is despite boasting the highest number of well-trained and educated women in the East African region.
There has been an attempt to make cross-border trade, because this is the typical informal employment that attracts a lot of women. There has been an effort to make informal trade, first of all, to try to move it from informality to formality.
We have instruments of governance on environment, we have instruments of democratic principles, but there is no clear-cut commitment at the highest level as a community to gender parity and gender inclusion. One of the consequences is, you see, the area of East African trade, which is predominated by women, cross-border retail trading, is the most harassed of all. Today, so many years in the East African community, you still see women being called smugglers. We all know the reality in Taveta, how women have been sexually abused in order to access neighboring markets because of artificially erected barriers to their participation in trade.
A lot of the time, that sort of informal trade is demonized. We talk about pannier routes, we talk about smuggling. Actually, that trade is legitimate. It should be supported. It shouldn't be stopped. And the framework for understanding that whole issue is important. So, you know, a lot of the support we've given to women is simply helping them understand their rights, bringing them together and supporting their associations, and then helping them buy together, get access to finance, get access to skills.
Among the challenges that women in cross-border trade face is credit access, with a majority relying on loans from family and friends, as well as limited access to secondary and tertiary education and shouldering a higher share of unpaid care work.
It's like Kenya right now, the artificial manipulation of interest rates by the capping interest rates at 14% and government borrowing at 12%, and government borrowing you are exempted from tax, meaning in net terms, banks make more money lending to government than lending to entrepreneurs. You have dried up credit markets. So let alone women, just the entire business community is carrying an inordinate burden because of assumptions that now you have low interest rates, but there's no logic in having low interest rates without credit. And that's where we are.
In East Africa, women are predominantly self-employed or are contributing family workers, the two forms of vulnerable employment. In addition, growing of cash crops has remained a preserve of the male gender.
We hope that after this publication will trigger a debate in the region, a conversation towards concrete steps to strengthen the woman entrepreneur.
The study reveals that the introduction of equal property rights has not sufficiently reduced the gender gap in land ownership, with about 35% of women in Kenya being land owners. Judith Akolo, Channel 1 Business.